Good morning, everybody. Happy Friday. Coming into the long weekend, July 4th. We kick things off. First day of the third quarter, first day of the second half of the year. Quite a start to 2022. Markets trading dramatically lower across the board for the first 6 months of the year. We kick off July trading. Right now, you got the S&Ps negative by 10 points. You're trading at 37.79. Yesterday's low, 37.41, before you got quite an acceleration to the upside. But, man, you almost gave it all back overnight. You had a low in the open yesterday at 37.41, and last night you make a low at 37.44. That's after trading above 38.20 in yesterday's session. Nasdaq 100, pretty similar action. You charge higher yesterday. You come back overnight almost to that price level. Right now, you're negative by 42 points in the Nasdaq 100. That's about 1/3% in the red. The Dow's off 98 points, 1/3% as well in the red. You're trading at 30,681. The Russell right now, negative by about 6 points, trading at 1702. We jump to crude. Crude catching a little bit of a bid from the overnight lows. We were down at 105. We're trading right now at 108.55 in the price of crude. Gold contract pulling back a bit. We just got a 1783 print, folks, in the price of gold. We're trading right now at 1794. I'm going to back gold up a little bit longer term. Nearing an area that has been support for gold at one point, 1741 on my chart, kind of an area that you might look to for maybe some support. That's where you were in August of last year, September of last year, and where the acceleration higher began in December of last year. Last year's low in gold, 1673. So right now down about $13 in the price of gold contract. Silver, down 79 cents. Take a look at silver, right? Silver, much different story. Well below where you were trading at last year. Silver, basically back to where you were trading at in September of 2019. And we jumped to notes and bonds. Quite the trend reversal, man. That's a weekly. Let's go back to the daily. You talk about a reversal. So much for 3%. Oops, you're sitting at 2.9, something like that. We'll pull it up in a moment. But the 10-year, up 30 ticks to 119.15. You're more than 5 full points from where the 10-year was on June 14th, 15th, and basically 16th before you accelerated higher. Now, backing this out yet again, I mean, it's been a one-way trip to negative prices, folks, in the 10-year. Yes, that's quite a bounce, but every time we've gotten a bounce like this previously, whether it was the bounce we got in February, whether it was the bounce we got back in May, you've seen lower prices coming at you after that. We'll see, though, man. You're talking about 2.9%, down from almost 3.5%. Growth concerns, a big factor going on right now in this market. We jump over to the VIX as we kick off July trading. VIX sitting at 28.51 coming into the long weekend. Not too much economic data, but we're getting some stories today. GM was halted pending news today. Are they trading yet? They are trading. Not too much of a decline. Okay. There's your action on the open for GM. They were halted. We'll get into that story in a moment. Revising some of what they're dealing with, and they're down 75 cents. Market's down about 10 points so far this morning as well. Let's jump around and see how some of those FANG stocks are trading. Quite the volatility yesterday, man. Amazon goes from 108 to 102.50, and you almost made it back to 108 overnight. You were trading at 118 to start off the week. For some context there, folks. 118, what's the exact high? Let's get it to be exact. 117.98. Missed it by 2 pennies, okay? 118. You almost trade down to 102. That's almost $16, folks. And this thing just split 20 for 1. That would have been a $320 move, just to illustrate how fast these markets are moving. All right, let's jump around to some of the stories. We'll kick things off with the risk of sell-off from Goldman. Still high. Well, the risk is definitely still high. What it's going to happen, the probability of it's going to happen, we'll see how that plays out in the next 3, 6, 12 months, as I like to say. It's happening right now. Goldman strategists warn risk of stock sell-off is still high. Equities are pricing in only a mild recession. Much of the valuation derating this year has been due to higher rates and inflation. Pay attention to those bonds and what just happened, folks, because we are seeing a shift here. But unless bond yields start to decline and buffer rising equity risk premiums due to recession fears, equity valuations could decline further. Well, we got some bond yields declining, folks, that's for sure. With the 10-year now at about 2.9%, that will come into things. And yeah, you take a look at where we were. We finished out the first half of the year, quite a negative print. What I will say about this, folks, is that you're not cherry picking 6 months of the year, okay? But not always indicative of the full year, because just take a look at 1987, right? coming into the crash, when was it? October, right? 1987, heck of a start to the year, 25.5%. That's the biggest number on this chart prior to 1975. Okay, and we all know how October 1987, as it plays out, 25%, you can give it back just that quick. But the market kicks things off, so they finish at 20.6%. We'll call it 21% in the red for the S&P. And yeah, we're paying attention to earnings, folks, because there's been a reset in the multiples. And what you do not want to see is those earnings estimates being pared down, pushing the multiples back up to some lofty levels, then maybe potentially causing the market to reprice those multiples yet again off lower earnings, decreasing the stock price. Corporate earnings are also likely to come up under pressure in the second half of the year as margins face the test of surging prices and weakening consumer sentiment. We will see how that plays out, folks. Michael Burry, he's gotten a lot of headlines recently. Recently he was saying, I saw him, and I talked about it earlier in the week, right? Tweeting out an article with a CNN article in there talking about basically companies with inventory doing returnless refunds. They don't even need to take the item back they're considering because they have so much inventory already that they might not even take it back and just give you a refund. And his point with that was that this will have a deflationary impact on the market. When you have all this inventory, you have these sales going on, that's going to matter. But guess what? He still thinks we got some ways to go, man. Adjusted for inflation, 2022 first half S&P down 25 to 26%, adjusted for inflation, okay? Nasdaq, whoops. Well, I guess that's just going to pull up the tweet. Nasdaq down 34 to 35%, Bitcoin down 64 to 65. Next up, earnings compression. So we may be halfway there. Maybe he's ballparking, maybe he's generalizing. But pay attention, folks, because the earnings are what matters. And in this economy right now, we may be facing a tough year to come with the factors that we are dealing with in a big way. All right, let's kick things off with some of the equities. So Kohl's, talk about some tough economic times. Yeah, they're not getting a deal done right now in retail, folks, with everything going on with waning consumer demand. Kohl's and sales talks with Franchise Group low as the outlook. They're trading dramatically lower on that potential going bye-bye this morning. They announced that they're terminating talks to sell its business, saying that retail environment has significantly deteriorated since the beginning of its bidding process. Yeah, my guess is Franchise Group said, you know what, hold on. We'll come back and buy this company if we still want it once the dust settles. Kohl's 36 to 29. You back things up for Kohl's. On a daily, we've seen some accelerations higher. I think that was a gap from 41 to 47 where they said that they were going with the Franchise Group bid. Kohl's, you're going to open at 29. Do you see 29 on this chart, folks? No, you do not, because it's not even on there. You got to go back to a 3-year weekly, and 29 in Kohl's gets you basically at the higher end of where this thing started spiking off the doldrums of COVID. I imagine Kohl's will be around, but you're going to be skipping around just above basically where you were in June of 2020, 2 years ago. We hit a high at 29.34. You're trading right now at 29.07 on Kohl's. All right, folks, stay tuned. S&P's negative by 6. We got some other equities moving. We'll take a look at GM as well, some of their announcement this morning. We'll be right back.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value. TFNN has just launched their July 4th Tiger Dollar sale. For 1 week only, we've doubled all the bonuses, where you can now get up to 20, 30, or even a 40% bonus on your Tiger Dollar purchase. Tiger Dollars are good on all TFNN newsletters, webinars, and trading services, and they never expire. For all the details and to get your Tiger Dollars before the sale ends Tuesday, July 5th, visit the front page of TFNN.com today.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Welcome back, folks. We got the S&Ps right now, negative by 5 points. Nasdaq negative by 25. The Dow negative by 68 points. And jumping back, so yeah, Black Monday? Yes, Black Monday, so 1987. I pulled it up, which was interesting. In terms of 1987, one of the best starts to the first 6 months of the year of the last 50. I think it was 1975 was the only one that beats it. So what does that mean? Out of the last 47 years, 1987 was the best start to the year. So not always indicative of how the end of the year goes, folks. And just pulling it up for some context here, Black Monday, the Dow lost 22.6%. That was October 19th in 1987. Interesting that you had the Dow up 44% going into 7 months, positive action into that deterioration. So middle of October, things started really falling apart, but the Dow was up 44% in a matter of 7 months coming into Black Monday. So the markets, sometimes they reverberate, they get ahead of itself in one way or the other. And right now, we got a market with the worst start in about 50 years, which is quite a statement. We'll see how we finish out the year. All right, jumping back to some of the other articles I had pulled up this morning. Excuse me. Talking about recession as well. JP Morgan warning on recession as brutal first half draws to an end. This current period is no doubt the most challenging in the career. You're stuck with a lot of liquidity in the system and rates that look ridiculously low relative to the levels of growth and inflation that we are seeing and where employment is. But man, I don't think that's indicative of where we are now, though. With the books now closed, the Nasdaq 100, 30% is what they fell. And the world index, MSCI, 20% is what they fell. What surprised markets was inflation. It's been a driver year to date. That's talking about another person in there. Crypto, pretty disastrous start to the year is one way to put it in terms of crypto. But a lot of comments here, folks, and we're going to see what happens, man, because we are seeing, pay attention to the move in the 10-year, man, because that is quite a bounce. And what will really be interesting is if we can get a bounce going beyond this level. You see a few bounces that we've had in the meantime. But, I mean, even taking this thing going back about a year ago to August when you were at 135, those are lower lows and lower highs in that market, folks. Even this bounce we have going on right now. I mean, just remember, from May, you bounced from an area of 117.5 up to about 120.26. So that was a 3.5 point bounce, almost. in terms of the bounce you got in the price. Now, you're seeing a 5-point bounce right now. That's a bigger bounce, but, man, we've seen turnarounds. We'll see where it goes. But pay attention, because that is quite a reversal, and we do have the 10-year right now under 2.9%, 2.88. Growth concerns, a big problem in a big way in this market. When you pull over one of the headlines I was taking a look at this morning, if we're just talking 10-year, 1-month low as recession fears intensify. This article, things move quickly. That was last night at 2.915. I told you we're trading right now 2.88 about the yield on the 10-year. The 30-year, 3.01%. The 2-year, 2.82% on the 10-year. All right, let's jump around to some of the other equities that are moving this morning. We talked about coals. Micron has their numbers. They are lower. We'll see how they're trading in a moment. Lower than expected sales outlook stemming from weakening overall demand. We jump over to Micron, these chip makers. You're going to be down about $2 on the open at 53. Just remarkable, right? You're basically back to where you finished the year of 2020. You're under where you came into in the pandemic on this equity. And there's your action on their numbers last night. You catch a little bit of a lift in the last few minutes, but Micron looking to open down about 4% on the open. So Apple gets an overweight rating reiterated from JPM, saying he's not worried about Apple's prospects as others. December price target of $200. That's pretty lofty right now with everything going on. Apple's still doing business in China, as obvious as that can be, and Apple fairly flat today. Yeah, Facebook. I got some Facebook articles up here. Let's talk a little bit of Facebook. So Facebook, I got 2 articles, I believe, up here. Let's make sure. Do I? Where are they? I know I at least have one. Here we go. Yes, I do. This is quite a number. Their plans, they slashed the plans to hire engineers by at least 30%. Now, taking a look at Facebook shares, you better believe they better be running this business a little bit differently when you're trading at 161. When you were just trading at 384, you came into the pandemic at about 214. Those plans were made during this phase of the run-up at 384. You're now more than cut in half. Many people could have had Facebook on margin, folks. For the better part of last year, if you purchased Facebook on margin, you lost everything. I mean, look how often this thing was trading above 320. You're trading right now at 160 for Facebook. So they're slashing the hiring goals, and engineers are like crucial. That's what they do, man. That's not sales. That's the raw build-out of their actual business. He told employees, Zuckerberg, yesterday, he's anticipating one of the worst downturns that we've seen in recent history, according to audio recording of a weekly Q&A. They warned in May that it was slowing or pausing hiring for some mid to senior level positions. He was much more precise yesterday, saying the company reduced its target for hiring plans to about 6,000 to 7,000, down from about 10,000. And when you look at it, they have 77,800 employees, right? So they were adding 10, now they're adding 6 or 7. Not a huge difference, but man, talk about quite a quote from Zuckerberg. Realistically, there are probably a bunch of people at the company who shouldn't be here. It's quite a statement from the CEO of your company saying that, folks, in terms of what's coming down the line. Part of my hope by raising expectations and having more aggressive goals and just kind of turning up the heat a little bit is that I think some of you might decide that this place isn't for you and that self-selection is okay with me. That sounds like Elon there, doesn't it? Nonetheless, Zuckerberg kind of up on the ante over there. I have to underscore, so here, in a memo to staff that appeared on the company's internal discussion forum, Chief Product Officer said the company must prioritize more ruthlessly and operate leaner, meaner, better executing teams. Well, that's just general stuff any executive should be saying. I have to underscore that we are in serious times here and the headwinds are fierce. We need to execute flawlessly in an environment of slower growth where teams should not expect vast influxes of new engineers and budgets. Facebook already facing a lot of heat coming into the market volatility that we're facing right now. Waning advertising, and they are all advertising, man, could be a big part as you see an economic slowdown, and maybe companies got to potentially pare some of the expenses that they are spending. Eventually, folks, I mean, just for some context, because context is important here, okay? Facebook, Meta, only a $436 billion company, man. What would Instagram be worth by itself? What would WhatsApp be worth by itself? And what would Facebook be worth by itself? What would Oculus Quest be worth by itself? Right? There's a lot of pieces to that pie. And at $436 billion, yes, you're still talking about an extreme amount of value that could deteriorate. But you're approaching levels, folks. You know, this thing was pushing $1 trillion. I think you were over that mark at one point. You're at $436 billion. And for all the problems that Facebook has, for all the heat that Facebook has, Instagram's a pretty great product. I like looking at pictures. I use Instagram pretty decently. The world is a fan of Instagram. The world is a fan of WhatsApp. Those are going nowhere. So at some point, folks, we'll see. But probably good to see if you're an investor that they're going to be pairing some of those goals, as they might be burning some cash in the quest for the metaverse development. Stay tuned, folks. We'll be right back for the open.
In a time of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve in a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they're expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, folks, markets are open and we're catching a little bit of a lift. You got the S&Ps barely negative by 1 point right now. Russell actually sneaking into the positive. There's your action on the S&Ps, 37.88 right now. Call it flat. Nasdaq 100, you're negative by 17 points. The Dow negative by 72, 30,710. The Russell flat. Bitcoin 19,295. Going to be an eventful weekend, long weekend for Bitcoin, I imagine. Last night, 18,525 for Bitcoin. This line here on the top of this chart, folks, that's a long-term line that goes back to when futures first began trading in December of 2017. You put it on a monthly, you can see, dating back to, you want to see something remarkable? Where did futures open at? I mean, God bless the person who said, you know what, I'm just going to buy Bitcoin when futures open, and I'm going to sell it right away because I know that there's no way that the opening print on Bitcoin will ever be the high for 3 years. And that's what happened, folks. Futures started trading with an open of 20,650. The high for the monthly bar, 20,650, December of 2017. You close out that month at under 15,000. So that is that line, 20,650, from where futures started trading 5 years ago almost. And you can see we're well below that line, 19,290 for Bitcoin right now. Ethereum trading just above 1,000. You were below that price level yesterday at 994. We jump over to GM. So GM, not down that much, down about 0.8%. We get the market in the red as well. So GM was halted this morning, pending news. They come out with news. I got the earnings up here. Excuse me, not the earnings. They talk about some of their earnings. I have some of the numbers that they're talking about. So 8:45 or so, they were halted, news pending. They come out, so they're going to be they're going to be making net income. They revised some of their numbers here, okay? 1.6 to 1.9 billion is what they'll be making for the fiscal, let me get this exactly right. Is that for the quarter? Yes, for the 3 months that just ended June 30th, okay? GM is going to be making 1.6 to 1.9 billion net income. Consensus, 2.5 billion. How many cars do they have sitting on the lots? How about this one? 95,000 vehicles in our inventory that were manufactured without certain components. Supply chain issues, folks. 100,000 cars sitting there waiting to be sold. Now, what's interesting is they say the sales to commercial, government, and rental fleets grew 29%. They also say they saw significant pent-up demand for GM vehicles amid low inventories. Now, they got 100,000 cars. But they get 100,000 cars without certain components. They have low inventories of completed cars. Eventually, that's going to sort itself out, folks. It will be interesting to see once this all catches up, okay? And once they're able to plug those chips into those 100,000 vehicles, maybe that eases car prices. Maybe that eases inflation, right? Those are going to be factors. I'm not sure how long they're going to take to play out. It's almost a question of when, not if. As in, there are issues in this economy, folks, that have to do with more than what the Fed is approaching, as in demand. Fed can alter the interest rates to affect demand in this economy. We got some supply issues in a big way. This is one illustration of those. 100,000 vehicles without certain components. Eventually, those vehicles will come to the market, and that will matter when they have a huge supply of vehicles. And then what if you have waning demand, right? It's going to be a recoil. Now, we take that as a perfect segue to a recoil in rate hikes. And I talked about this a couple days ago, I believe, on my program at one point. Forget rate hikes. These analysts are predicting interest rate cuts the next year. Now, we have some hikes coming down the line, folks, but the market's pretty much already priced those in, okay? Maybe that was the whole acceleration to 3.5% on the 10-year, okay? Now, right now, we are sitting in a range at the Fed of 1.5 to 1.75% in June. They hiked it 75 basis points. The current range is 1.5 to 1.75%. That's where we sit right now. We probably have 75 basis points coming down the line. On their next hike, we might have 50. Okay, now the market is starting to price in cuts as early as next year, which is remarkable to say. It's July 1st. We have inflation raging, and the market is pricing in cuts already next year. But that's where we are, folks. Now, let me get these exact numbers. Here we go. Now, this is talking about Berenberg economists. We're talking economists here, okay? Economists and analysts. Who knows if they're right, but you should be thinking about this conversation because you're seeing a lot of waning potential demand in the market. And I really believe that a lot of the influences are supply issues. If those supply chain issues right themselves, and meanwhile we have some waning demand to go with it, the Fed might have to repair this economy. We just had a 1.6% decline in GDP, folks. You don't see declines in GDP often. Now, that follows up quite a 2021 year where we were posting 5+% GDP growth, okay? Nonetheless, right now, these economists are talking about, and I would say this is a realistic number, see the Fed's key rate peaking at a range of 3.5 to 3.75. So it's about 2 full percentage points that the market thinks the Fed is going to raise from here. Okay? So maybe that's 75, 75, 50. Maybe that's 75, 50, 50, 25. Okay? Maybe it's 50, 50, 25, 25, 25, 25. Nonetheless, they're looking for 3.5 to 3.75 in the first half of 2023. But we project that the Fed will then pause and lower rates in response to lower inflation and recessionary conditions, including a marked rise in unemployment from Q4 2023 onwards to a range of 2.75 to 3% for the Fed funds rate by late 2024. So then they see them cutting, and they only see them cutting, though, okay, by about 75 basis points. So that's 3 cuts of a quarter point only by the end of 2024. So this isn't going to be some dramatic cutting cycle, okay? But nonetheless, it's important to have on your radar. The market is very forward-looking. And at some point, if they're going to pause their hiking cycle about 2 percentage points above where we're at right now, I imagine they're going to get there pretty quickly. I think they're going to front load all the hikes, folks. Why not? Why not, right? Whatever you're going to do, just bring it right now, man. Bring it right now. Shock that demand if that's really what you want to do. Okay? I'm not sure that's the solution, but that's what the Fed is looking for. Why not bring it right now to shock that demand, bring that inflation back down, and then you can move forward with potential cuts if you need to in the future. But we got supply chain issues, man. And as long as GM's got 100,000 cars on the lot and they're lower in their earnings guidance, look at this. Is GM trading higher? GM is trading higher. You got to love this market, folks. GM trading up 1.5% right now on the open, and that's with an S&P down by 9 points. You know, maybe the market already knows this stuff's coming, folks, and actually that revision is not as bad as they think. They're still going to make $1.6 to $1.9 billion for the quarter, even if the market thought they were going to make 2.5. We'll take a look at it again. Let's jump around to some of the FANG stocks as we come into the open. Amazon basically flat this morning. Apple down 0.4%. Microsoft down 0.7%. Tesla, quite a first half of the year for Tesla, up 0.1%, and we're going to talk some Netflix when we get back. Netflix, worst performing stock in the S&P 500 to kick off the year. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got markets catching a little bit of a lift to kick off July trading, coming into the July 4th holiday. Folks, if you're out there this weekend, if you're having a few cocktails, be safe. If you're on the water, okay, those boats are just as dangerous, if not more dangerous than cars sometimes. Get yourself a designated driver. Use an Uber. Be careful out there. We all want to have a lot of fun. Be safe out there, please. S&P's up by 7 right now, trading at 37.96. And you know what today is as well, folks? It's Bobby Bonilla Day, man. Gotta love this story, and it ties back to finance. It ties back to Madoff himself. Happy Bobby Bonilla Day. Bobby gets his 12th installment of $1.193 million today. The Mets have paid him so far $14,300,000 to not play the 2000 season. The 2000 season, that's all we're talking about, folks. And he gets 13 years left at $15.5 million. Now, breaking down how this happened. The Mets owner should probably be in jail as well for this, as in there were a lot of bright people that knew what Madoff was doing or should have known, folks, okay? The way that this all comes down is that Bernie Madoff was paying interest rates that were supposedly risk-free that were above the risk-free rate. Imagine somebody telling you that, saying, listen, I get this great deal, man. I know the risk-free rate on a 10-year right now is 2.9%, but you give me your money, and I'll guarantee I can make you 5 or 6% without any risk at all. Red bells should go off everywhere, folks, okay? And this is what was happening with Madoff, and it was happening to such a degree that in the year 2000, the Mets agreed to buy out the remaining $5.9 million on Bonilla's contract. Instead of just paying him that $5.9 million in the year 2000, they agreed to make annual payments of the 1.193, we'll call it 1.2 million, for 25 years, starting in 2011, including a negotiated 8% interest. Why would you do that, you would say? Well, they at the time figured that they could just give that money to Madoff, the $5.9 million, instead of giving it to Bonilla. They'd give it to Madoff, they'd make more than the risk-free rate from Madoff, and then they would just pay it out, and they would make millions in the process. Smarter minds should have known what was going on in that market, folks, and eventually it all unraveled. And yeah, I would say that there's a level of complicit nature when you have that degree of wealth and you're giving millions upon millions to somebody who's guaranteeing your returns. Can't tell you how he's beating the market and guaranteeing those consistent returns. We all know how it unfolded. So Mr. Bonilla, he gets his 1.193 today, and he gets it for 25 years starting in 2011. So what's that take him through? 2036, 2035, something like that. 13, what's it? How did I set it here? 13 years left at 15.5 and under new ownership. Mr. Cohen tying it back to finance as well. They're going to celebrate the day, man. Why not? Now, what's interesting here is this article goes through other people. Well, the Mets, they weren't the only ones to do it. think they were the only ones doing it with Madoff. But they did it for Saberhagen as well. He gets no love, but man, he got it done too. He gets $250,000 a year from the Mets for 25 years. That started in 2004 as well. I mean, look at this, folks. The Mets, they were running a financial organization that was using all of the current value of the contracts, taking that money, investing it with Madoff, who was guaranteeing returns that were unreasonable, and then paying out future values for those contracts at a lesser rate. And then they act surprised that somehow this scheme that was creating $1 million of risk-free gains was somehow not on the up and up. But yeah, there's more contracts than that. I mean, look at Manny. He's collected $24.2 million total from the Red Sox through 2026. Ken Griffey Jr. Oh man, loved him as a kid. Too bad he got hurt. He was on pace to do it all, man. His swing, Ken Griffey Jr.'s swing, right? If you're unfamiliar with it, folks, go look it up. I'm not even a huge baseball fan, but that guy's swing just so effortlessly, how he was just knocking out homers. He gets $3.59 million from the Reds every year through 2024 and a deferral from his 9-year, $116 million deal signed in 2000. Todd Helton's got a contract out there, so there's some delays as well, but nothing like Mr. Bonilla, as he'll be collecting paychecks until he is 72 years old. Gotta love it, man. Gotta love it. Okay, let's jump around to see what else I had up here. Okay, articles. I got Tesla. Yeah, so Tesla. Quite a start to the year for Tesla. Braces for delivery slump on China plant slowdown. Analysts expect second quarter deliveries of over 281,000 cars is what they're looking for. China, we all know, a big problem. And yeah, global vehicle deliveries likely came up short of the last 2 quarters. So that's the number they're looking at. For the Model 3 and Y, 262,000. You see, the last couple quarters, it's been approaching 300,000. Yeah, and they cut their second quarter deliveries estimate, some of them to 245,000 units. And I imagine they got some problems at the Shanghai factory when they had to shut down, folks. And I think that we get that data somewhat soon from Tesla. Look at this market catching a bid to kick things off. Tesla shares up $11 at $684. And I talked about Netflix, man. Netflix, quite a demise in the beginning of the first half of the year. Surprised to hear. I mean, I know it's a Max Payne situation. You kicked off the year at 600. If you said you'd be trading at 162 by May, people probably would have looked at you a little bit awkward, wondering how you'd come to that. But nonetheless, Netflix, the worst performing stock in the S&P 500 and the Nasdaq 100. I heard that. There's been some hellish performing stocks, folks. And for Netflix to take the crown, quite a pullback for the first half of the year. The one thing I will remind you, I looked up 1987, right? I was surprised to see the acceleration. First half of the year for 1987, up 25%. I think I saw in that article the Dow was up something like 44% in the first 7 months of the year. You lose 23% on one day on October 19th, and the Dow had already lost like 4 or 5% on the Friday coming into that week in Black Monday. So not always indicative. Sometimes when you get those types of pullbacks, you can get a reverberation to the other way. I'm not sure we're there just yet, folks. I kicked off the program, okay, this week, just talking about areas of confluence that you should be ready for. That area in the S&Ps, folks, is 3,200. Not out of the realm when you think that we already traded down to 3639. Right? We're sitting at 3,800 right now. Huge wake up. I was doing the Nasdaq 100. I was doing the S&P. I was looking at the Dow. I was talking to my dad. He pulls up the comp. The comp basically got there. You got there by 50 points in an index that was at 16,212. That's getting there, folks. Okay? And the comp's the one that's let us down before. Would you have believed me if I told you in January that the market was going to give up a 382 retracement of the entire run higher from the low of, what's the low in the Nasdaq? 1265 in the comp, the full comp. The low in 2009, let me make sure there's nothing lower. Nope, 1265. That's the low of February. Nope, March. Let's get it exact so you know what we're talking about. So if you want to tell somebody else, because this is a remarkable one, folks, March of 2009, 1265. You trade up to a high at the end of last year of 16,212. You're talking about a pullback to a 382 of that entire run. Folks, that's a run from about 1,000 to 16,000. Excuse me. And within the span of 6 months, you give up almost 40% of that whole acceleration. Now, if the comp did it, okay, you better believe the S&P might be able to do it as well. That's at 30. Not sure we're getting there. Make sure that you have everything in order so that you're you're okay with those risks. If you're not, then do what you need to do to be okay if the market gets down there, because it's possible, folks. Stay tuned. We'll be talking some Tiger dollars when we get back, folks. That sale running through July 4th.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the Eurozone. How about 8.6%? Eurozone inflation hits record as the European Central Bank prepares for its first rate hike in 11 years. It's going to be interesting, man, to see how the ECB starts hiking rates. We're already in our hiking cycle. How does the dollar perform against the basket of currencies in the dollar index, against the euro, some of those other currencies out there as well? If you want to know, folks, check out the Tiger Forex Report. Our man Teddy Kegstack kicked that off this week. Brand new newsletter. You can sign up on the front page of TFNN. It's $97 a month. Use promo code TEDDY25, folks, right there, and you'll save 25% for as long as you subscribe. We don't offer those deals, only as a charter member joining Teddy's report as he kicks things off. You can lock in that savings every month for as long as you stay on, hopefully for years. Now that one, you're going to have an opportunity through July to get that deal, but this one ends this weekend, folks, running through July 5th. We'll be back on Tuesday. Markets closed on Monday. Folks, if you're a current subscriber out there, please check out Tiger Dollars. I'm always surprised that current subscribers aren't all using Tiger Dollars, okay? It's very simple. You buy the Tiger Dollars, you apply them to their account, they all get used in foregoing transactions. If you're thinking about signing up for any services this coming, whether it's the end of this year, next year, they never expire. You can transfer them to family and friends. They're fully transferable. 3 options to buy. You can get a 20, 30, or 40% bonus, folks. Check it out on the front page of TFNN, and that sale running through July 5th when we get back on Tuesday from the July 4th holiday. Looking forward to that one. And yeah, seems like the market, maybe we just ease into the day, man. We got the Nasdaq right now up 55 points, 11,583. S&P's up 19. I'm not sure you're going to see something too dramatic. You will probably see some light volume late in the day with it being July 1st, coming into the July 4th holiday. And yeah, please be safe out there, folks. Go have some fun. Enjoy it. Enjoy the holiday. Enjoy the holiday with your family. Enjoy the long weekend for sure. But be safe out there, folks. Make a plan if you're having cocktails out there. If you're out on the water, if you're at the beach, it's too easy sometimes. Because life's too beautiful, man. Make sure we see you back here on Tuesday. Make those smart decisions. Stay tuned, folks. We got a treat. We got our man Basil Chapman. He is coming up next with the Tiger Technicians Hour. Thanks so much for starting your trading day with me, folks. Stay tuned. Our man Basil. He's coming up right now. We'll be right back.